Ever wondered how microfinance works? Or perhaps, what even is microfinance? Well, you're in for a treat. Today, we're diving into the world of microfinance, a world that brings financial services to those who would otherwise be overlooked by traditional banks and lending institutions. At its core, microfinance is about providing small loans, often called microloans, to impoverished borrowers who typically lack collateral, steady employment, or a verifiable credit history. Think of it as a lifeline, a way for people in developing regions or underserved communities to start small businesses, finance their education, or even just get through a tough financial patch. Now, you might be wondering, how does a microfinance institution operate? Well, it's not too dissimilar from a traditional bank. They provide services such as credit, savings, and insurance to their clients. However, the key difference lies in their approach. Microfinance institutions focus on those who don't have access to these services, using their resources to support the financially marginalized. Microfinance institutions operate on a business model that revolves around the provision of small loans with shorter repayment periods. They often use innovative methods to ensure repayment, such as group lending or progressive lending, where the loan size increases with each successful repayment. But where does a microfinance institution find the capital used for lending? Good question. The answer lies in a mix of sources. Some institutions are funded by donations from individuals or organizations, while others might receive funding from international development organizations. Some microfinance institutions also raise funds by issuing bonds or taking loans from commercial banks. Then there are those who mobilize savings from the very clients they serve. This way, the clients get a safe place to keep their savings, and the institution gets a reliable source of funds. Now, it's important to note that while microfinance has been hailed as a tool for poverty alleviation, it's not a magic bullet. Like any financial service, it comes with its own set of challenges. High interest rates, over-indebtedness, and lack of transparency are just a few of the issues that have been raised. However, despite these challenges, the impact of microfinance cannot be understated. It has empowered countless individuals to take control of their financial futures. It has provided a means for people to lift themselves out of poverty and create a better life for themselves and their families. The non-profit microfinance institutions operate as non-governmental organizations, cooperatives, or community-based organizations. Typically, they rely on grants, donations, service fees, deposits from clients, and concessional funding to support their operations, as they may not generate profits or distribute dividends. Often they prioritize maximizing social impact over financial returns and may be more focused on reaching the most marginalized or vulnerable populations. So, social investors who are more keen on the impact or make investments for tax reduction purposes can be the ones who finance their operations. They usually have greater flexibility to experiment with innovative approaches and adapt to the specific needs of their target communities without the pressure of generating profits. On the other hand, for-profit microfinance institutions operate with a profit motive. They can sell their shares in the market, and so they do aim to generate financial returns for their shareholders or investors, including social investors who are in the game for financial returns. They often rely on commercial funding sources such as loans, equity investment, or deposits to finance their operations. For-profit microfinance institutions may prioritize scaling their operations and achieving financial sustainability over maximizing social impact. One of their major challenges is they face a pressure to balance financial returns with social goals, which may sometimes lead to tension between profitability and social mission. A microfinance institution, MFI, can be equated to a social enterprise, primarily because both entities share similar goals and characteristics that focus on creating positive social impact alongside financial sustainability. Here's why. Social mission. Both social enterprises and MFIs are driven by a social mission to address specific social or environmental challenges. In the case of MFIs, the mission is usually to alleviate poverty, empower underserved communities, and promote financial inclusion. Double bottom line. Both MFIs and social enterprises often operate with a double bottom line approach, aiming to generate both financial returns and measurable social or environmental outcomes. While traditional financial institutions prioritize profit maximization, MFIs and social enterprises prioritize balancing financial sustainability with social impact. Target population: both MFIs and social enterprises typically target marginalized or underserved populations, such as low-income individuals, women entrepreneurs, smallholder farmers, or people living in rural areas. They provide products and services tailored to the needs of these populations, aiming to improve their livelihoods and well-being. Innovative approaches. Both types of organizations often employ innovative approaches to address social challenges. For example, MFIs may offer unique financial products like microloans, savings accounts, or insurance tailored to the needs of their clients. Social enterprises may innovate in product design, service delivery, or business models to achieve their social objectives while remaining financially sustainable. So, to sum it all up, microfinance is about providing financial services to those who are typically overlooked. It's about giving a chance to the little guy, offering a hand to those who want to improve their lives, but just need a little help to get there. It's a fascinating world, full of challenges and opportunities, and it's changing lives one small loan at a time. And that's the world of microfinance for you. It's complex, it's challenging, but above all, it's empowering. It's about more than just money. It's about opportunity, dignity, and hope. And that's something we can all expect in our lives.